Most people follow the crowd. I run in the opposite direction. This isn't just a preference, this is the fundamental rule of survival. Because crowds always move in the wrong direction. Always. During those dark days of 2008, while Wall Street crumbled and everyone was doing the same thing, running away, Bear Stearns had collapsed, Lehman Brothers was buried in history, AIG had nearly vanished, everyone was selling what they had and rushing to shelter. I was doing the exact opposite. I was buying. During those insane days, sitting alone in my office, I asked myself this question. When everyone is selling, why aren't you buying? The answer was simple, but very few could understand it, because the greatest opportunities are born in moments of greatest fear. When Washington Mutual collapsed, there were screams in newsrooms. The end of banking, they wrote. The system is completely collapsing. The market was red. Everyone was panicking. I was excited. Because at that moment, I was seeing one of the greatest acquisition opportunities in history. In the emergency board meeting, when I laid out the numbers, everyone's face went pale. I was proposing to buy Washington Mutual's assets. "Are you insane?" said one member. "Everyone's running away. Why are you going in?" "That's exactly why," I said. "When everyone runs in the same direction, you run the opposite way." This was my life philosophy. The majority is always on the wrong side. That night, sitting at the negotiating table talking with regulators, the negotiators across from me couldn't understand what I was thinking. For them, this was a rescue operation. For me, this was the moment to lay the foundation for the next decade. "Too risky," said the FDIC representative. "How will you handle such a massive burden?" "Not taking risk is riskier," I said. "History is written by those who dare." What would you have done? When everyone said dangerous, would you have listened to their voices too? This is where most people stop, because going against the crowd brings loneliness, and almost everyone fears loneliness. I fear missing opportunities. When I signed the Washington Mutual deal, the pen in my hand wasn't just a tool. That pen was the symbol of a mindset, the mindset that says yes when everyone says no. 6 months later, that acquisition's value had doubled. The media wrote about a lucky move. There's no such thing as luck. There's only courage and right timing.
But the story was just beginning. Because going against the crowd isn't just valid during crisis times, but in every period. Do the opposite of what people say. Most of the time, you win. In 2010, everyone was saying the tech sector was turning into a bubble again. Facebook hadn't gone public yet. Twitter's future was uncertain. Analysts were warning, were repeating the mistakes of the 2000s. I saw something different, a historic moment when the foundations of the future were being laid. During that period, most major banks stayed away from tech investments. Too volatile, they said, too uncertain. I was doing the exact opposite. I started investing in fintech. In the board meeting, when I presented my fintech strategy, silence fell. "Jamie, tech companies are trying to kill banking," said our CFO. "Why do you want to collaborate with them?" "If you bring your enemy to your side, they stop being your enemy," I said. "Don't let your competitors beat you. Make them your partners." This approach seemed radical at the time. Traditional bankers saw tech companies as threats and tried to stay away. I saw them as the future and embraced them. Result? Today, the transaction volume we conduct through our fintech partners is growing faster than our traditional channels. The opposite of the crowd proved right again. But the most dramatic test came in 2020. During those March days when the pandemic began, the world had stopped. Governments were closing borders, companies were shutting down, the stock market was crashing. SPY had dropped 30%. Everyone was moving to cash positions. I was buying stocks. "Have you lost your mind?" my wife said. "Why are you buying when everyone is selling?" "Because buying when everyone is selling is the most guaranteed way to get rich," I said. During those crazy days, while I was buying airline stocks, analysts were writing the aviation sector is finished. While buying energy companies, they were saying the oil age is ending. While buying bank stocks, they were screaming the financial system is collapsing. I was quietly buying. Because I knew the world doesn't stop. People don't stop flying. Energy needs don't disappear. The monetary system doesn't collapse. Most people see temporary situations as permanent. I see permanent things as temporary. 6 months later, my airline stocks had risen 150%. My energy portfolio was breaking records. My banking investments were returning strongly. The media again called it lucky. Not luck, strategy.
So where does this strategy come from? At the end of the 90s, when the dot-com bubble burst, I had learned a painful lesson. Back then, I was behaving like everyone else too. If the market was rising, I was buying. If it was falling, I was selling. When the tech stock collapse happened in 2001, I had sold like everyone else, in fear and panic. Result? Major loss. From that day on, I made a promise to myself. I would never move with the crowd again. I began to understand crowd psychology. Why do people make wrong decisions in groups? Why does everyone make the same mistake at the same time? The answer is simple: the illusion of security. The human brain prefers being in the wrong majority rather than being alone, because loneliness seems scary. But no one who made history was ever in the majority. When I understood this, my strategy became clear. Observe the crowd, do the exact opposite. In 2012, everyone was saying Europe will end. The Greek crisis was at its peak. Italy and Spain were shaking. European banking stocks had collapsed. I started investing in Europe. "Europe is collapsing," said my risk management team. "Why are you going there now?" Because when everyone says it's collapsing, I say it's about to be reborn, I said. Those European investments from that period are now among the most profitable parts of our portfolio. In 2016, when Trump was elected, everyone said markets will crash. On election night, futures had opened 5% down. There was panic in the air. I was placing buy orders. "Markets weren't expecting Trump at all," said a trader. "Collapse is inevitable." "Markets always expect wrong," I said, "and I always do the opposite of markets." The next day, SPY hit records. My positions had gained 8% in a single day. The crowd was wrong again. In 2018, everyone was running from cryptocurrency. The bubble burst, they wrote. Bitcoin had dropped from $20,000 to $3,000. Everyone said crypto is dead. I started making crypto investments. "This is too speculative," said conservative board members. "Why are you entering such a risky area?" "Because the area everyone runs from is usually where the biggest opportunities are found," I said. Today, our crypto positions, but that's another story. The real point is this: going against the crowd isn't just an investment strategy. This is a life philosophy. Whatever people say, first stop and think. Why does everyone think this way? And why am I not thinking differently? Most of the time, you'll discover what everyone thinks seems logical, but is wrong. Last year, at the peak of the AI boom, everyone was saying AI will change everything. Tech stocks were rising wildly. From NVIDIA to ChatGPT, everything was seen as revolutionary. I started selling AI stocks. "You're crazy," said a portfolio manager. "The AI train has just started. Why are you getting off?" "Because when everyone gets on, the train derails," I said. 6 months later, tech stocks dropped 40%. The positions I had converted to cash were protected from major losses. The crowd was wrong again. I was right again. Can you apply this strategy too?
It's not easy, because going against the crowd means constantly being alone, constantly being seen as crazy, constantly being criticized. But it also means getting rich. This month, when the metaverse stocks crashed, I made a major investment in Meta. Everyone says metaverse is dead. I say metaverse hasn't been born yet. Who's right? We'll see in a few years. But I know this: the probability that the crowd is always wrong is 90%. I prefer to be on the 10% correct side, because the 10% correct side owns 90% of the wealth. Finally, let me tell you this: following the crowd seems safe, but is dangerous. Going against the crowd seems dangerous, but is safe. This is the paradox, and very few people can understand this paradox. Can you understand it? Or do you still prefer to stay in the safe majority? Because the safe majority never gets rich. Wealth requires courage, it requires loneliness, and most importantly, it requires the courage to believe that the crowd might be wrong. I possess this courage. What about you?